The outcome of the March 4th general election that saw Kenya's founding president's son, Uhuru Kenyatta, garner 50% plus one vote required for the elections not to go into a rerun had been largely contested, with petitioners citing irregularities in the process. Now, a ruling was made on Saturday by Kenya's Supreme Court, which declared Uhuru Kenyatta fourth president of Kenya. I'm now joined by Eric Musau, research analyst from SIB, that is an investment bank, for an analysis, or rather insights, on the market's pre and expectations following the ruling. Welcome to the show.
Thank you.
Now, I know you're not a politician, but what do you make of this ruling?
I think to the market it provides a lot of certainty. I think if we were to go back to another election, it would have provided another prolonged period of uncertainty. I think one of the other important aspects that came into this is that the judiciary is actually independent, and it provided what in the eyes of many was actually a balanced ruling and actually a fair ruling given the evidence that was provided. And I think on the back of that, investors are a lot more confident on the Kenyan economy going forward.
Now, speaking about the manifesto, they have quite some detailed manifesto of things they hope to achieve within the next 100 days. One of it being sort of helping the economy grow to double digits. And also there's the issue of medical insurance. Do you think this will be realized, and where are they going to get this money from?
If you look at the issue of economic growth, it's probably going to be a bit more progressive, so maybe 1 or 2 years to really get to the double-digit level. If you look at the national healthcare scheme, that was already part of what the government was planning under Vision 2030. And it looked as if they had harmonized their manifesto with some of the government documents that were already available publicly. And what we are seeing is that they are actually trying to merge those two and ensuring that they can actually achieve some of this. And there is already a lot of efforts being made in terms of providing universal healthcare. It's not going to be entirely government funded. There's a big component that they're looking at in terms of raising the amounts actually chargeable to private companies and essentially individuals who get that, and but negotiations are still ongoing with regards to how much increase that's going to be and so forth, and how that's going to be managed. But I think that the overall momentum is really on things which have already been begun, and really it's more fulfilling them. Now,
speaking again about getting money to fund such initiatives, should you expect a tax increment come June 2013?
It's a tricky one. There's obviously a lot of spending which is going to come through. I mean, if you look at some of the other things that have been promised in the manifesto, we expect spending increases to rise significantly. What we think is going to happen is that they won't increase current taxes, but likely they might focus on new taxes, hopefully to bring in new people into the tax bracket. And one of the easier casualties might be a property tax or increases in property taxes. So that for us, we feel could be something that could be enough in the June budget.
But already the property taxes are at about 30%. Will it be really credible for us for it to be increased further than that 30%?
In fact, it depends on how you look at it. There are some categories of property taxes which you don't really tax. You could have, say, capital gains on property, which is not really taxed or formalized. You could have property taxes with regards to regions. So maybe within Nairobi, you sort of have higher property taxes. So currently, what you call rates could be jacked up so that instead of being paid in terms of nominal fees, it's paid in much bigger amounts, and depending on the location of the property, actually having bigger amounts in those specific areas. And so if you want to move people away from maybe certain cities, you raise the property taxes within the cities, and so that way you're trying to move development away from the main cities, and that could be a way of actually spreading development across the country.
Before we went for the Easter break, the inflation statistics were released, and it's down from 4.45 in February to 4.11 in March. What should you expect going forward?
Inflation has really done very well this year, and we see it continuing that way. obviously January and February and part of March are usually very challenging months from the point of view of food. But what we see in coming months, electricity tariffs are going up, so that might have an impact on inflation in coming months. Maybe not immediately, but from the next 2 or so months, inflation might start picking up.
Now, and finally, just to wrap up, what are the stocks on your watch list this week?
We're looking at the oil stocks. Total released numbers at the close of last week, so we'll just see how that performs. And then we have Kenol Kobil, which is yet to announce its full year results, but we expect them to be pretty disappointing. And then what guidance they'll give with regards to the outlook of the company, given that now the discussions with Puma Energy sort of fell apart. So in terms of how they're going to expand across Africa going forward without Puma Energy.
Mm-hmm.